Good evening, everyone. Welcome to our crew seminar this week. We've got a great one for you this week. We've got the people from Basecamp Resorts here to talk about an excellent investment opportunity.
Yeah, we're very excited. Dawson, who works for the company, he has been following it for about 3 years now. And he came into Calgary and showed us what they're up to, and we were pumped. And the reason why is that we always want to provide our clients the best opportunities out there. And we've seen what Basecamp's done before. I've actually stayed in Baker Creek before, and I've seen what they do, and it's awesome. And now, so the reason why we teamed up with Basecamp is that we share the same philosophies. We met with Dawson. They look after their clients. They're a growing company. They're true to their word, which we love. And they're doing exciting stuff, Tim. When we heard about the Nordic Spa going on in Canmore, we were like, wow, this is good. This is something. And we've all driven past this piece of property. When you go through to Canmore or go through to Banff, you see it on the right. They built the beautiful church just behind it. It's the old Holiday Inn. I mean, the ladies are going to get into it tonight, but we're very, very excited to present this. And maybe if you hold questions to the end, normally we do questions throughout the presentation, but let's get all the information out there and then we can have questions at the end. Okay.
So we're going to bring Teresa and Sky with Basecamp Properties. They'll introduce you, they'll tell you their positions within the company there. There they are.
Hello.
Hey, so if you guys can share your screen and get going on the presentation, that would be great. I know, we don't have a ton of time. Take it away.
Sounds good.
Right. Thank you so much. I'm Sky McLean and this is Teresa Cook. Okay, perfect. We're in business. Well, listen, thank you so much to everyone for joining us tonight for our presentation. We really appreciate the time that you've made for this. We're really excited to share the story. My name is Sky, like I said, and this is Teresa. I dreamt up this crazy idea in 2016 and Teresa was the first employee. So she's been with Basecamp since the beginning. And what we're going to do tonight is, in the interest of time, do a really quick presentation and then leave the Q&A till after, and then obviously open to follow-up anytime, email, phone call, text, you name it. But I think the interesting thing is that the opening to this presentation was, talking about how, there's people out there who don't have a lot of money, but then they build a portfolio of real estate, sometimes only starting with as little as $24,000, which is what I did. I bought a condo in Canmore. At the time, it was $240,000 and I had 10% down, and it was my primary residence. Completely unbeknownst to me, this condo happened to be zoned in Canmore for Airbnb as well as primary residence. It's a special zoning we have here in Canmore. So I was working in Calgary and commuting and thinking, this commute is crazy. I'm going to rent a room in Calgary, and when I'm not in Canmore, I'm going to Airbnb this condo and see what happens. Literally knowing nothing about real estate and nothing about hotels. But I was working for a real estate developer at the time, learning about real estate. So toss this thing on Airbnb and kind of forget about it, to be totally honest. Going about my days in Calgary, I worked for Apex Developments, Trico Homes, Turo Developments. And throughout that career, did a variety of different jobs that taught me a lot about real estate. But anyway, one day I get this email, boom, Airbnb, hey, you have a booking. And I'm like, right, we've got a booking. So I accept the booking and I, start paving the way into this little Airbnb venture at my condo that I also lived in. So I would hide my clothes in the closet, have an Airbnb guest, go to work, sleep on my friend's couch, come back. Okay, got a cleaning unit. Okay. It was like a total cluster, but all of a sudden it started making real money. And I'm like, holy smokes, this Airbnb thing is not a joke. So off I go and I borrow $165,000 from my mom with interest and all the rest of it, and buy another condo in Canmore. But this is when they were cheap. Unfortunately, now they're not that cheap. And I put that on Airbnb. So I'm working with my job. I'm running these 2 Airbnbs. And I'm like, geez, this Airbnb thing is really good. It's making me more money than my day job and taking half the time. So to hell with this day job thing, I'm going to build a hotel. I took my experience from real estate and again, had no money, but ran around and raised money from investors such as yourselves and created what's called a limited partnership. So limited partnership is a great vehicle to invest in real estate, because with that model, as an investor, you have no liability. So nobody's coming after your house or your car or anything that you own. It's pretty much like buying shares in a company. So for example, you go buy shares in Apple. You're not going to call the CEO and tell them what to do with their iPhone, nor are they going to call you and say, hey, we need your car as collateral for something. It's very much a silent investor, and you're making passive income throughout that investment. So my first hotel, which is called Basecamp Resorts in Canmore, is 32 units of stacked townhomes. So for lack of better words, purpose-built Airbnb. So halfway through construction, I'm running QuickBooks and I'm doing all this stuff. And I'm like, this is a catastrophe. I don't know how to run QuickBooks. So then I hired Lisa because she's an accountant. And I was still living in this Airbnb condo and renting it out. And so when I was renting it out, at this point, I'm no longer working in Calgary. I'm staying in the camping trailer on the building site, renting out the condo on Airbnb to make enough money to survive while I'm raising all this money to try to build this hotel. And most people were like, you're insane. But you know what? 5.5, 6 years later, it's worked out, and we've built to a portfolio of 8 operating hotels and another 8 underway. So that little story will lead into the presentation. Hold on, more technological. So this is our team, as you know, obviously Teresa and I. Darlene, our VP of development, does our permits. Dave runs our operations with Danielle, and Jeff runs our marketing. So we have a team of, our executive team, but we also have actually 160 employees across all divisions of the company. So we're a vertically integrated company. We do everything from land development to the development, getting the permits, like what I said Darlene does. We do the construction, and then once the hotel is built, we do the operations, which is run by the operations team, and we do all of our marketing in-house as well. So that's a huge advantage of our organization as an investor, because we're not spending all this extra money hiring all these third-party contractors and consultants and marketing companies. We do everything in-house, which adds so much value for the investor. For this particular project, which is we've acquired a 99-unit hotel called the Holiday Inn. It will be debranded and rebranded as Mountain House by Basecamp. We've hired MTA, which is a Calgary-based architecture firm who've done other resorts and spas and restaurants in the past. We've hired Jen McInnes, a spa consultant, which is really important. She's built spas and consulted on spas all across Canada, so she knows everything spa, way more than we know about spas, which is perfect. And Danny, our spa contractor, who has built, like physically constructed spas, again, all across North America. So for us, it's really important to always have, all the consultants required to get a project done. This is a nice picture of us on our groundbreaking and our Revelstoke project. So we currently have hotels in Canmore, Banff, Revelstoke, Fernie, and Lake Louise, and many more under construction. So the interesting part that I wanted to talk about is, that $24,000 that I mentioned at the very beginning has now grown to $430 million in real estate projects over 6 years. So that is obviously a very long story that we don't have time for tonight, but I'm always happy to share as many details as required to get comfort from investors. But right now we have 8 operating hotels, 7 underway, and we do other development projects. So actually right now we're sitting in our office in a 60,000 square foot industrial building in Canmore that we built and sold industrial condos and kept some. We have another 5 underway, and we have a bunch of land in our land bank for future hotels and development projects. So this is a series of photos. We don't need to go through every one again. I know we don't have very much time, of all the hotels that we've built and or renovated. So this won't be our first renovation project. So the Mountain House Hotel, which is now the Holiday Inn, coming back to Mountain House, the hotel and spa, which is a Nordic spa, is actually our 4th hotel renovation project. So this isn't our first rodeo. We've done this before, and we've ironed out a lot of kinks along the way. So we have learned everything down to, what's the best room layout? How do we contract the right contractors? How do we get people on time, on budget? All the things you think about as a real estate investor, we've been there, done that. And trust me, made like a lot of mistakes. So, and here's another series of,
for a second here.
yeah. Oh yeah.
We just have to ask everybody out there to mute your microphones. We're getting a lot of sound from people's microphones. So if you're watching this presentation, can you mute your microphone to make sure your camera stays off?
And then Teresa, you can also mute them. If you see them pop up, you can mute them as well. if they're not.
Yeah,
Okay.
the microphone.
Oh, okay.
And then one other thing, if there's people in the waiting room, just press admit.
Oh,
Oh,
okay. Thank you.
So it's
Oh,
because
I
you guys
admit
have
all.
hosting duties now, so it's a little tricky doing both, but
Mute all.
yeah.
yeah,
Yeah, the little microphone, just touch it and then it'll mute them.
yeah.
And can I mute all or will I mute you as well?
No, you can mute us as well. We
Mute
can, yeah.
Oh, okay.
But you can unmute yourself, I think.
Yeah, oh yeah, yeah.
There we go. Okay.
Okay, so welcome to those of you we've just admitted. Sorry, we are hosting this and forgot to click admit the people in the waiting room. So welcome. We were just talking about our projects and the different ones that we've acquired and renovated and built over the years. So this is a slide Teresa can speak to.
Sure. And this is actually quite a significant slide or important slide to show the operations. As Sky said, when she first started her whole journey down becoming a hotelier, she thought she'd be able to sit in her 1-bedroom condo and do the rates, hire some cleaners, give access to people to rooms, and then they check in, check out, clean it, and do it all over again. But she, as she said, she quickly realized that there's a lot more to this when you're in a bigger scale. And what this slide speaks to is that through our hiring process, we realized that revenue management plays a significant role in the hotel operations. So it actually takes a lot of mathematical and statistical analysis of how hotels do in the area. And we have created a great team of skilled people that all they do is sit behind their computer and analyze rates and occupancies of all of our competitive markets in the area. And for most of you, I'm sure you're not in the hotel industry. So to explain this rate, there's three metrics that define how a hotel is doing in the market. And that is based on occupancy, ADR, which stands for average daily rate, and RevPAR, which stands for revenue per available room. So there is a system out there that hotels report to called the STR report that tracks, doesn't give names of hotels, but it tracks how every hotel is doing within your market and compares to how you're doing. So based on this, since we have started this journey 5 years ago, this slide only shows from 2019, but because that's when all the hotels were actually open at the time, but it shows that we've consistently beaten the market in all areas of occupancy, ADR, and RevPAR. And that's due to our strong management team that has excellent customer service, our revenue management, and our marketing. It all contributes to creating this big success.
So more about the opportunity. This is the current Holiday Inn that we've acquired. We're now unconditional on this deal and really excited to be able to share this with all of you. As you can see on the right-hand side of the highlighted area, there's an 1.5 acres of area for a future Nordic spa. It's actually on a slope that works really well in our favor because it looks straight at the Three Sisters. So like over there is the Three Sisters, which is the iconic mountains of Canmore. And this existing building, if you had to build this today, which we're paying $24 million for the building and the land, it would cost you like no brainer, 40 million bucks at least, like just the building itself, the parquet, the elevators, the rooms, the cost of construction today. So we're purchasing this asset well below replacement cost, which is a really important metric in real estate that I'm sure you guys are well aware of. And so it was one of the main reasons why we were excited about the deal at the beginning. And then all of a sudden we walked on the site and we were like, holy smokes, like a Nordic spa in Canmore, this would be incredible. As many of you probably know, there's a Nordic spa in Kananaskis, and it's doing exceptionally well. In fact, our spa consultant that I mentioned earlier, Jennifer, is the one who designed and implemented the Nordic spa in Kananaskis. So she's well aware of how the spa market works in the Bow Valley. So we're combining our hotel, as you can see, with a Nordic spa and a restaurant that's existing, but we're going to renovate to create a high-end experience in Canmore. So here's just a sketch that's based on, as you see on the left, the images that we're going for. And this is just a very preliminary sketch of how we're going to redefine this experience at this current building. And then as I said, Jen is like the spa guru combined with MTA architecture. I like going to spas, but I wouldn't say I'm like the spa design expert. But you go into the spa from the basement. Right now, the basement of the hotel is a series of really tacky boardroom type things that we're completely revamping into locker rooms and massage rooms. As well as when you leave the locker room, you go through a tunnel and you end up outside into zone 1 and then zone 2, zone 3, and zone 4, which are a beautiful series of experiences, salt treatments, mud treatments, different temperatures of spas. There's going to be a waterfall, there's saunas, there's hot tubs, there's everything you could imagine in a Nordic spa, with a hotel right next to it and a restaurant in the hotel, as well as a food and beverage outlet at the spa. For, you know, you're at the spa, you want to have a nice salad and a cocktail, you can do that right there in zone 2. So moving to, so these are just some images of inspiration, so you can see exactly the vibe and the feeling we're going for. At the end of the day, everything in our business is about the customer experience. People are coming here to have an experience. They're making memories. People are paying a lot of money to come to Canmore, to stay in Canmore, and we want that experience to be a 5-star experience. So a lot of our hotels are actually rated 3-star, not because they're bad experiences, but because you can't be a 5-star hotel if you don't have a restaurant and you don't have a spa. And a lot of people don't know that. You have to have all these amenities in order to be 5-star. It doesn't matter how good your customer service is. So I always say we're a 5-star customer experience in a 3-star hotel. However, this will be a 5-star hotel in our portfolio. So again, just some images sharing the experience. This is important to understand, which is our timing. We're acquiring the hotel in January of 2023 and then going,
oh yeah,
2023, sorry. And then we're going to 6-month non-operational phase, just means we're totally shutting everything down in order to have the most effective renovation of the rooms, reopening the rooms, and go in and continuing into the construction of the Nordic spa until 2024 of June, when we reopen that. And then we get into what is really interesting in the real estate investment world, which is our master fund. All of our hotels, once they're developed and stabilized, roll into what's called the SkyWest Investment Hotel Fund. So that is a really great vehicle for investment, because instead of being invested in just one hotel, you're invested in the entire pool of assets that we showed you those pictures before. So you're invested in Canmore, Banff, Lake Louise, Golden, Revelstoke, Fernie, and as well this hotel, that all amalgamate into a fund, which makes your investment less risky because you're exposed to various markets, more diverse, again, exposed to various markets, as well as more liquid, because if you ever, let's say, life happens, you need your money back, you need to sell your units to someone else, get sick, get divorced, move out of the country, fly away into the sunset. If you're selling something that's in a fund of real estate assets, it's far more liquid than if you're just invested in one asset. So what we want our investors to do is take on the development risk of an asset such as this one, get that gain in the form of rolling up their limited partnership units into the fund. The important thing about that is it's a tax-deferred investment rollover, which means that if you're investing 100 grand now and it's worth 200 grand later, you get 200 grand worth of units in the new fund, in the stabilized asset fund, but you don't pay any tax on that. Whereas if we sold the asset, you would pay tax on that gain, very similar to if you're selling your house, you pay tax on a gain if it's an investment house, of course, not if it's your primary residence. So in this case, all of that tax is deferred until we sell the fund, which is something that we'll probably look at doing in around 7 years. So at that point, we would go to investors and say, we might want to bring in a bigger investor, we might want to sell out, or hey, if everyone's really happy with the returns, we'll just stay the course. So that explains this whole thing right here. Going into this development LP, redeveloping the asset, at which point here you have 3 choices: roll up to the master fund, get bought out, or maybe a combination thereof, depending on how you're feeling at the moment. That is what we're planning for 2026. So this investment is from now until 2026, when you have those 3 options.
Again, just showing the images of rolling it into the investment fund.
So this is a quick slide about the current stabilized assets that are in the fund, the current development pipeline, which includes this 99-unit hotel, and where we have land for future developments. So moving into the numbers, we have in this particular hotel, a plethora of revenue streams, from the Nordic spa, general access to massages, food and beverage, retail, private events, and of course, our main one, which is the overnight accommodations. The overall projected cash flow slide is here, which we'll share with you. But I think the more important one to talk about is this one here, which is the $100,000 example, because that really brings light to how this will work. So Teresa will talk about this slide.
Sure. So I think the main point on this slide is the second line where the wording preferred return distribution. So what we've implemented in this limited partnership is that we've set an 8% preferred return to the investors before there's any split between the general partner and the LPs of the partnership. So what we're showing here is that in 2023 and 2024, that is during our construction phase. So 2023, obviously we're only open for 6 months. And then in 2024, we are constructing for half of the year, constructing the spa and opening the spa in the spring of 2024. So the actual entire project is not fully operational till spring 2024. So what this slide is showing is that any distributable cash in 2023 and 2024 are going to the investors. It's not hitting that 8% preferred return, but we're not saying that we will meet it. So the 8% preferred return actually is guaranteed as of 2025 and 2026. So before any other distribution to the GP happens, the first 8% goes to the LPs. And then after that, any excess cash is split 80% to the limited partners and 20% to the general partner. And I don't know if we actually discussed that, but Sky is actually the general partner of the project. So she holds, by being the general partner, she holds all the liability of the actual project. So you as a limited partner, your exposure is only the amount that you have invested, where Sky has to sign and guarantee all the loans and holds all the liabilities for all of that. So there isn't anybody going to be phoning you and saying, hey, something's going wrong, you have to help out and pay the loan. That's Sky's responsibility, and she bears that risk by doing this project. So I think that kind of explains what this page is. In the end, the 2026, when the sale happens, that 149,000 is the gain from after all payment of the limited partnership investments done, 20% to the GP, and that's the balance to you guys. So it shows that your 100,000 investment at the end of 2026 is worth 264,000.
Yeah, and we can explain, anytime you guys need more clarification on the general partner limited partnership structure. This is a very, very, very common, almost always used structure in real estate where we're attracting retail investors such as yourselves. It keeps your investment completely, as Teresa said, shielded from any risk other than the actual cash that you're putting in, which is why I used that example earlier of if you buy stock in Apple or in Facebook or whatever, you're not exposed to any of that corporate risk. I, as the general partner, taking on all that corporate risk. The 8% preferred return guarantees that you are making 8% on your money before I, as the general partner, make any money. I have also invested and will be investing $1 million of my own money as a limited partner. So I invest alongside limited partners, which even if you guys don't invest in this deal, but you're looking to invest in a real estate deal, I would never invest in a deal that the general partner isn't putting their own skin in the game. That's like a critical component of a real estate deal. So a little piece of advice along the way. What's really important in real estate is a sensitivity analysis. So a lot of decks such as these will say, okay, here's our projected returns, which we did in our $100,000 example. But obviously nobody knows between now and 2026 exactly what's going to come down to the penny. So Teresa can explain this a little bit better.
Yeah, so I actually think this slide is quite important as well, because obviously we can't guarantee you're going to make $1,000 in 2023 because there's so many variables that can happen, which I'm sure you are aware of. So we chose 2 metrics to use as a sensitivity analysis to show that, one, because of these times, interest rate is an unknown, obviously, and the other is if we don't meet budget. So this table is showing you that you can, if interest rates go down to 5.5% and we're under budget, that your range could be anywhere from 24.5 to 33.5, but if interest rates are at 6.5 and we're 10% over budget, then you could be down to 24 or 30%. So it's kind of like you have to pick your comfort level of these metrics that we've used. But if it's right in the middle, which we are projecting, which is 6% interest rate and being on budget, then that range of 32% to 43% is where we're saying this project should succeed.
Yeah, and to explain an annualized rate of return, a really simple example is if you put $100 into a deal and you make $0 in year one, and it's a 2-year deal, and you make $100 in year two, you've actually made a 50% annualized rate of return because you've made 0 and then 100, but over 2 years, you've made 50% on your money on an annualized basis. That's like a really simple example. So as you know, during construction, and as we showed in the $100,000 example, there's less money being distributed during construction because obviously we're spending money, we're building the spa. And then once that's all open and operational, people are making way more money. So by annualized rate of return, it's looking at 2023 to 2026 and putting that total return in an annual basis. So there's just been some really great press about Basecamp recently, as well as about our company in the hospitality industry. And actually recently there was an awesome article that we'll share, which was the CBC just promoting this new spa, and Canmore just needs more amenities. Like, I love mountain biking and hiking up the mountains, doing all these things, but most people coming here just want to have a relax, have a cocktail, sit in the hot tub, take some pictures, put them on Instagram. So we're really confident that this amenity will not only add something to this hotel, but add something to the community as a whole. All right, we can open that up to questions. I think we have to, I guess everyone can just unmute themselves, right, as they want to ask questions.
Oh, I have a question. What is the difference between annualized return and return on equity at the last slide?
Right, so return on equity is your total cash on cash return, whereas annualized return is what it would be.
The time value of money. So it factors in that 4 years have gone by. So it putting a present value calculation on your money that you gave in 4 years ago.
Thank you.
Anybody else? And if nobody else has any other questions or thinks of something down the road, you can reach out to Tim or Azad to gather more information on our project.
Yeah, and we're always happy to share anything that would be helpful to, you know, have you and your group and your investor groups and, you know, whatever the situation may be, your holdcos, your individuals, come and invest in this deal. I know it's a lot of information to digest all in like the last 37 minutes or whatever it's been, but at the end of the day, the beauty of our investments is it allows people to invest in a deal that they otherwise would not be able to do. So this is a $24 million project. Acquisition cost, total cost of $48 million. But like the, you know, tagline of this presentation is you only need $50,000 to participate in this deal. And, you know, this is one of our first times, to be totally candid with you, presenting this on this type of platform and opening this up to more of the general public, for lack of better words. But that's because we've realized that, you know, just going to our little network is really limiting, and we want to grow our business. We have land, like we said, in all these different locations, and we need to, you know, broaden our reach to various investors in order to grow our business, which benefits obviously growing the business, but obviously benefits the investor to have access to this type of deal flow and these types of returns that aren't normally available. And a lot of people will put money into, say, like a private equity firm or something like that. But those companies run around and then find deals and partner with people like us, which they call the sponsor. And by the time you pay all the fees to the private equity company and then all the fees to the developer, the money to investors is way less than if you come to the direct developer directly. So hopefully we've helped to gain your confidence in our business, and we've made an average of these types of returns and IRRs, so internal rates of return, in the past to our investors. So like we said, this isn't our first project. We've made investors quite a bit of money, and we hope to do so moving forwards.
And I've noticed a few people asking what the minimum investment is, and it is $50,000. But the one caveat is that everyone needs to be accredited investors. So 50 is the minimum, but yes, that you have to be able to tick that box to be able to invest in the LP.
Awesome. Okay,
I think
Alex,
some questions have come up.
Oh, sorry, go ahead.
no, if you guys can read them, go ahead.
So what is
Yeah, so 50 grand, and then what kind of profit have you made your past investors? So
so-
typically on an annual basis, people make 8 to 12% cash on cash. So if you invest $100,000, we're distributing 8 to 12% cash on cash. So in a development deal like this, we only distribute once a year, but once you're in the stabilized asset fund, we distribute quarterly. So
But for this project itself, the returns for the first couple of years are lower. It's like 3.5% to 5.5%. Once construction is complete and open, that in 2025 and 2026, the returns are between 15 and 19%, I think, cash on cash.
yeah, so the returns get really high, and these are really in line with all of our other development projects. So this is not, like I said at the beginning, out of our wheelhouse. Obviously, during construction and development, the returns are lower because we're building things, we're constructing a spa, we're still making revenue from the rooms, but it's way less cash on cash than afterwards.
Yeah. So no, the returns I don't think I can share my screen anymore, but the return is not 0 in the first year. It's actually 3. We're projecting it to be 3.5% in the first year.
Because we will be closed for the first 6
6
months of 2023, but then we will be open for the latter 6 months, which will produce cash flow to investors.
Yeah.
What you
Well, that's,
okay.
you have a choice in 2026. Everybody will have a choice. You can either, the hotel will be appraised and valuated at that time. We'll be rolling the asset into our SkyWest Investment Fund LP. Investors of Mountain House LP can either choose to roll into that investment, or they can choose to exit out, or they can have a choice of doing a bit of both.
We think it's best to stay into the SkyWest Hotel Fund, because then you, again, take advantage of that tax deferred gain and continue to make these quarterly distributions, which our investors in our SkyWest Hotel Fund are really happy with. But like I said, if in 2026, you're like, no, I want to make my money and I want to go wherever, somewhere else, or just keep investing on the development side, which is higher risk but higher reward, then that's fine too. Like Teresa said, we get the hotel evaluated by a third-party appraisal such as CBRE or Cushman Wakefield or one of these professional hotel appraisal companies, and then we go from there.
So accredited investor, it's not a simple one-line answer. In our actual subscription agreement, there's actually about 3 or 4 boxes that you can pick to choose from, and maybe Tim or Azad know more, like to explain it better, but it basically means that you have to have a certain amount of assets in your portfolio to be accredited. And I don't know, I can't offhand know if it's 1 million or I can't remember.
I think there's like 25 different boxes you can tick. It's based on either income. So yeah, $200,000 annual income is one of the boxes. But if you don't have that, it can be based on asset value. If you don't have that, it's based on, there's a bunch of different criteria that we're happy to walk through with you.
And we're happy to share the subscription agreement and limited partnership agreement if Tim or Azad don't have it already, and it explains it all in there for sure.
Yeah, we do have it. Yeah, we can share it. There's another question there. When do you need to commit the 50 grand?
We are projecting to have a closing on November 30th. So right around the corner.
Yeah, right around the corner. But if someone is like, a few days behind that, we just, this can't go into the holiday season because we need to close right away in January. So, but if someone needs an extra week, the best thing is to reach out to Azad and Tim and have that conversation, and then they can relay that to us and we can see if it's possible. But right now the closing is November 30th.
Yes. And we will send the LPA and the subscription agreement to Tim and Azad, and please feel free to send it on to.
Yeah, we've created a website with all of the information that Tim and Azad can share with you guys. And then I think just someone here is asking, is there an email? So all of the questions can go through Tim and Azad, and their emails were up there, but they can probably email you guys their email, I'm assuming. And then we can go from there.
Up there as well for people, and we can take everyone through the accredited process as well. It's not as hard as people think, and we know a lot about.
No, there's like 18 different examples and options. So it sounds scary, but it's really not scary.
Yeah.
There's a question there maybe for you, Tim, I guess. Does Crew also partner in this hotel deal?
Yeah, so when we're getting involved in something, we're definitely involved. We were brought this about a month ago, Tim.
You let them.
Less than a month ago. So we're excited about this. We believe in the project. We believe in Basecamp. And I mean, Dawson, who we know is our contact with Basecamp, he's been following us for 3 years for the people that weren't on earlier. And we're very, very excited about this project. And that's why we're putting it out there to all of our members. And once again, Basecamp has the same philosophy as us. They're true to their word and they're growing, which is exciting. And we understand if this is too short of a time period for this venture, but we know Basecamp is going to continue with growing their company. So we definitely want to be involved in that going forward if this one is too quick.
Yeah, and the last question there, I'm sure you guys can read it. How many investors do you, and what percentage have you collected so far?
Yeah, so we're raising $19 million. So it's not so much about the number of investors, but about the equity amount. So obviously that will like shake out as it shakes out based on if people put in 50 or 100. We have a couple of investors that are putting larger amounts, a few investors obviously putting in 50. And so far we've collected 40% of that. So this is, you know, it might sound kind of last minute, but with these things, it always works out that it's always an 11th hour thing, you know, when there's a lot of time. If we said, oh, hey, we need the money by May, everyone would just peter off and like forget about it. And these things always seem to come together at the last minute. I don't know why. It's like studying for university exams. Most people just do it the night before. I think it's just a human nature thing. So we're really excited about the project. We're particularly excited about because of the Nordic Spa, which is an amazing facility for Canmore. And sorry, there's one more question.
Yeah, it's for this specific property. So the asset, the picture is the Holiday Inn, what it is existing right now. That is what this LP is purchasing.
Yeah, this is a specific project that will hopefully, that will roll into the SkyWest Hotel Fund. But like I said, people have the option to get in or get out. So someone said, we need to understand your company and project better. So that is where we would like to communicate through the team, Tim and Azad, and we can definitely we're an open book. So any historic, you know, financials, performance, returns to investor,
or tours of our properties.
Tours, like come out to Canmore, come meet us, come walk through the units we build, come see this hotel. Like if you're going to invest in this hotel, let's take you all through a walkthrough. Let's walk the site. Let's show you the views. Like we are so happy to do anything that makes you feel more comfortable. Cause I know that right now we're like a couple of complete strangers. So we want to make everybody feel not just comfortable, but connected to us and to the deal and to the hotel that they're investing in. Because at the end of the day, if you put in as little as 50 grand, you own a piece of this asset. So we want you to really believe in it as much as we do.
And yeah, there's a question about, can I withdraw returns every year and keep the initial investment? And yes, that is what our pro forma is showing, is that any returns means that that's physical cash going back to you, but your original equity is staying in the project till the end.
And then in 2026, you can roll either your equity with returns or just your equity or any amounts you want into the SkyWest Investment Fund or take it all out. And there's always options or opportunities in the future to invest in other A, development deals, or B, simply investing money into the SkyWest Hotel Fund and not assuming any of the development risk.
Awesome. And I'll just add on to that. We are looking at either hosting something here in Calgary, or if it turns out that it's better off, people want to come out to Canmore, we can as well. And so the best way to move forward with this, if you have any last questions, please throw them in the chat. We'll get to it. There's another question right now, but the best thing is to register interest, and we'll put up the email addresses for that. And we can send you a package that we've been sent already for you guys to look through as well.
Yeah, and we'll share our investor website and password with the team, and they can distribute that to you guys, because right now, as we know, we are definitely at the 11th hour, that's for sure, but there's so much information there, and Teresa and I and the rest of the team are always happy to take calls, to have Zoom calls, and like we said, to do tours, or if everybody who's part of this group is like, you know what, we don't want to meet in Calgary. We want to go meet at the hotel. We want to walk the walk. We want to see the bricks and mortar. Like totally, we can make that happen, or we can do a combination thereof. We could have a Q&A in Calgary, and we could then do a tour later on next week or the week after or the weekend at the hotel. And this is a really good question, actually. Sorry, we have a loan from Connect First, which used to be called First Calgary and is now Connect First. It's a Calgary-based credit union. They're a really great lender to work with, and they're lending 65% loan to cost.
And then the question before that was, at the roll up, is there a fixed rate or a current market rate? So what happens is we engage with either a professional firm such as CBRE or Cushman Wakefield. They're kind of the leaders in hospitality valuations, and they complete a third-party appraisal, and that is how the hotel will be valued. So we used a metric that we've seen similar reports that we've received them from our current hotels. So it's kind of middle of the road is the cap rate that we used for the exit in 2026.
And then in terms of interest rate, we're being, the Connect First is lending us 5.2% money on the acquisition. And then on the construction side, so the room construction as well as the spa construction is 6%,
6.13.
Yeah, 6.13. So there's two facilities, the one, like I said, to acquire the building, and then the other for the construction. And then that blends together into a term loan. So I think someone was asking about the rate.
Oh, okay.
And then we can lock that in.
Yeah.
Yeah.
Okay.
Now that's awesome.
There's still more questions.
Yeah, we'll take a few more here.
I think we're actually, anyone underwriting, there's funding shortfalls.
Were there any other investment
Right
in the
here.
project? Oh, sorry.
The one above
Is
that.
anyone underwriting? Yes. So actually, we've definitely underwritten if we have to get a $5 million mezz loan. And we've underwritten that at, if we had to borrow money at 10 to 12% to bridge the gap between that 19 million and getting going. And we have a variety of plan Bs should we not be able to fill the 19 million. So it's not like a destitute situation, as I'm sure it does sound that way, but it's not.
Yeah.
But obviously our preference is equity partners, which is how we've built our business.
Yeah, and actually, I was reading that about you today. So that's awesome. And for people out there, if you are sitting on equity, this could be a great opportunity for you to increase your returns. And as you can see, the returns come in 2026, and the money sits there, and you're investing into a company that is going to continue to grow. And this project is going ahead no matter what. So it's not like, Basecamp came on tonight saying, hey, we got to get this and let's go. It's an opportunity. And that's what we love about this scenario right now, that we can be involved and offer it to all of our investors. Any other questions?
The last question on there is, were there any other investment in the project? So yes, there's a bank that's doing 65% of the cost, and there is only one GP in that Sky's company.
Yeah, and then like we said, we do have lines on mezz debt and different bridge financing opportunities we can take advantage of, but we're really confident based on the returns of the deal, the location, this amazing building. And again, like I said earlier, buying something for a really great price with all this land in Canmore. I'm not sure how familiar you are with land in Canmore, but like there's land being valued at $8 to $9 million an acre for just raw land. Like it's so crazy right now. So this deal is actually a really good buy.
Awesome. Well, I think we'll wrap up. We want to thank you, girl, for coming on. Thanks for the great presentation. And I'm sure we'll be in touch soon. And any last words from you, ladies?
Well, we just really want to thank everybody for the time. I know we're all busy, but we all like we said, we are open to any questions or anything at all that would make you feel more comfortable, and we would love to have you as part of the team.
All right, thanks, ladies. Thanks.
One more question. Will we provide the documents? Yes, all you have to do is email us. We'll put our contact info at the end of this, and we can send you the whole investor package in one email.
Awesome.
Okay,
so that wraps up Sky and Teresa. What a great presentation.
Thank you.
Thank you.
Have a good evening. Once again, everybody, we'll just quickly zip through this. Here is our free ebook. This goes through the core fundamentals of investing in real estate. If you're just starting off, it's a must read. It's free. You simply download it from our website, calgaryrealestatewealth.com. We'll go to the next slide quickly, Tim. Here is our book. Once again, Fearless Real Estate. This book changed a lot of our clients' lives, and it actually shows you how real estate has changed our lives. So if you are thinking about it, the difference between this book, we read Rich Dad Poor Dad about 25 years ago, Tim. Rich Dad Poor Dad changed our lives, but it didn't give you any of the juicy stuff, the meat and potatoes.
It gives you the day-to-day scenarios that real estate investors are going through right now.
Yeah. And it's a great read. It's fun. And then the next thing is, if you are thinking about investing in real estate, it takes an interview to go through to take this program on. It's not for everybody. It's designed to help people create $1 million from real estate. We only take on a select amount of people to do this program. And if you are interested, you can email us for a meeting.
Finally, Crew TV, we've talked about it. This actual seminar will be on Crew TV. So if you want to go over it again, see some of the numbers again, it will put this up on YouTube probably by the end of the week. And our YouTube channel, Crew TV, provides tons and tons and tons of client interviews, property walkthroughs. Some of our seminars are up on there. It provides free information. It's free for real estate investors.
Yeah, and the link is at the top of the chat. You can just click on that. It'll take you to our page, and it's awesome. It's really working out, and we're getting great feedback. You should check it out. Okay, so next thing is, if you're thinking about investing in real estate, the next thing to do is contact us. And here is our contact details. Best thing to do is send an email, and we'll get back to you as soon as possible.
Any requests for the information package about Basecamp's, operations, this tremendous opportunity that they're having in Canmore right now, just send us an email. We'll send it all dated right now.
Yeah, and we want to thank you. Our next webinar in 2 weeks' time, we have Michael Ustav coming in. He is our accountant, and he's going to go through the tax advantages when investing in real estate. This is something that I can't stand because I find it so boring. But as investors, you need to either hire the right people or have Tim as your as your partner that understands all these things and implications with taxes. And there are some things that you really have to understand. So that will be
and Michael is on top of the latest Revenue Canada rules as in regard to real estate investment. So it's even though as that says it's boring, we really have to watch this seminar. You can ask Michael any questions about real estate investment and the tax implications and how Revenue Canada looks at it. He's a great source of information, and at that seminar, he'll be answering your questions for free.
Yeah, and one last thing, if you hear of anyone wanting to buy or sell real estate, please contact us. Our number one aim when we work with people is to make them money. That's why we put on this presentation tonight. And if you think you want to make your friends or family money when they buy their next piece of real estate or sell, we're going to give them the honest advice that we give all of our clients. We hope to see you in 2 weeks' time, and thank you for joining us.
Yes, thank you very much. See you guys in 2 weeks.